Oil is approaching some key upside levels. We're going to have a look at what's going on there, alongside looking at some of the fundamentals that are occurring in the commodity. And then the trading takeout is going to be on how to understand changing market narratives, because we have seen a lot over the last couple of years. Let's have a look and a deeper dive into those. But before we get into today's content, make sure you like this video and subscribe to the channel so I can pop up in your YouTube feed every day, giving you the best market commentary to make sure you retain your trading edge. A little while ago, I think it's about 2 weeks ago now, I posted a chart and spoken about oil when the Red Sea issues had kicked off. And it looks like we're having sort of a slow grind to the top of the range, top of the let's say the December high, basically. You can see the December high just here. So let me just highlight that actually. There's the December high. We sort of came off the 200 daily moving average there without necessarily touching it. But the key bit here was, trying to get above this range again. And I'd highlighted these levels up at 84.5, then 80, let's call it 87.75, and then eventually all the way back up here at 94-ish. I think this is going to extend higher. And the reason I say that is purely based on the Red Sea issues. You know, any sign of uncertainty is going to cause some bid in oil, especially when it means that the supply of oil might get, throttled a little bit, not necessarily shut off like it was a couple of years ago, but the supply of oil could get considerably throttled. Now, there could be an element of a balancing act whereby activity generally, globally, transportation, manufacturing, etc., they're all down, they're all subdued. If you look at the manufacturing PMIs, they're not doing great for a lot of places. The UK, funnily enough, actually doing pretty well in the composite measure, so services and manufacturing. It was at 52 and a bit just yesterday. So UK's doing pretty well. France is doing really poorly, actually. But generally, as a global aggregate, it's dampened, which could mean that, we sort of flatten off on oil rather than, get a massive rally amidst the supply shock. But in my view, I still would lean on it being quite bullish, in fact. And I think it could cause some upset, especially with the disinflation crowd. I've been wrong on inflation before, though, don't get me wrong. I thought inflation wouldn't rear its head because I thought the GDP offset was sufficient to not cause inflation again, but that was completely wrong. Hold my hands up to that. But in this case, I think the way the chart is also looking, it looks pretty bullish. It looks like there could be a squeeze, a pretty rabid squeeze as well. Now, I don't think that, that doesn't necessarily mean that there's a squeeze apparent all the way up to these levels, but I certainly think that if we are to examine it a little bit closer, I think, up into there is a very probable way of looking at things, because if we're looking at how it's been trading here, it's pretty bullish quite a lot. If we look at this, I can always forget where the arrows are. Here we go. If we look at this candle, for example, that's a daily bullish engulfing. It took basically both sides and then closed way higher. If we look at this one as well, that is a massive pin bar, okay? Pin bar taking the lows here, considerable amount of lows, actually. So we're looking at a bullish framework, and then obviously you've got this kind of head and shoulders-y pattern, or inverse head and shoulders pattern. Depends what happens here at the 200 daily moving average for me, though. But the backdrop here is that there could be constraints on oil, stemming from their Red Sea issue, stemming from any kind of escalation in conflict. The Israel-Palestine conflict wasn't one that was really going to kick up any sort of a fuss. I guess you could argue that the extension of that is the reason why we're seeing a potential, supply cut in oil. at the moment, as the Houthis want to attack US ships because they're allied with Israel, perhaps. Who knows? But the way that we look at things is, okay, where is the pain? Currently, I think the pain is with those who are betting against inflation being able to be higher. If oil is able to reclaim those levels, inflation will tick back up. It's a scary thought, but that is what will happen. We'll see headline inflation higher, and that will feed through back into business costs, etc. Therefore, ticking up the CPI core prices as well. But in terms of how we're looking at this, I would purely be thinking, okay, let's wait and see what happens here at the 200 daily. Do we have a sufficient enough case to say, okay, the bullishness is reversing, let's trade it back to the downside, in which case these levels here are opened up because these are relatively untouched. We'd be looking at, trading back down to 71.5, say, or do we extend higher? And there's equal risk to reward there as well, which is quite nice. We're looking at this 200 daily. I mentioned it the other day with regards to spot and trend. We're looking at this as being relatively low volatility in the oil price. And whenever there's low volatility, it means the potential for expansion of volatility. So do keep your eye out for that. But again, if we look at the general trend, we're looking at the market going that way. We're looking at this is the COVID. I think this is the war in Russia, isn't it? This is when it kicked off. So this is really where we're focused here on oil. And I think the more that we go on in terms of this trend, I do think it will simply, well, why can't I delete that? I do think it will simply just extend this way. There. So that's a big channel that we're looking at. You could make a case that, there's sort of a channel here as well. And we're just bounding up and down. So there's multiple different perspectives here. I think it's just important to stay nimble on what the fundamentals are. Escalation, oil price up. De-escalation, oil price down. So keep that in mind, and we'll revisit this over the coming weeks to months as well. Today's Trading Takeout is on the power of narratives in markets. Now, narratives are extremely important, especially when you come to looking at stocks, not so much in FX because that's purely dominated by interest rate differentials, but narratives in stocks are absolutely essential. See, over the last couple of years, we've had various different powerful narratives going on. Energy, and more specifically, nuclear, has seen nuclear-related stocks go absolutely parabolic. Cameco, fantastic example of this. Rolls-Royce, another one. Then, of course, we've got EVs, and more specifically, lithium. Lithium has been an absolute killer for anyone that has been looking at mining stocks. Lithium has been all the rage. It's important, therefore, to understand what the next key innovations will be, but then finding stocks that aren't necessarily extremely close to the surface of seeing the connection between, this narrative and then what is underneath. For example, with Rolls-Royce, they don't mine any uranium. What they had been doing was creating a small modular reactor, which means that nuclear power plants can be set up in about a quarter of the time as the bigger ones in multiple different areas. So you don't just need one large one. With, lithium, it's okay. We're not looking directly at the car manufacturers themselves. We're looking at the components that might contribute to that car being manufactured. They tend to be more undervalued and smaller stocks, which allow you to perhaps put a little less risk on for the potential of a larger gain. But it's important to understand that what we're doing when we're looking at narratives is we're trying to maximize risk to reward. And you want to spot when a narrative is forming, and it might be an outside bet, which is when you use a reduced position size. If you think that something has a lower probability, you cut your risk massively on your position size. And you want to try and see how much that narrative does develop. And one good way of doing this is using Google Trends, actually. Track a search term over a couple of weeks or months and see whether it's gaining traction. Because I can guarantee you those search terms are correlated with more volume going into the market.